All right, this meeting is being live streamed. This is the Investing Power Hour on Chit Chat Money. My name is Brett Schaefer, and I'm here along with Ryan Henderson. Ryan, how are you doing today? I am in sunny Arizona, which is quite lucky because this is the day while the rest of the country is under, seems like negative temperatures. So
Yeah, yeah, I am not in sunny Arizona like you. Unfortunately, I am in the snow. It's actually like probably the coldest day of the year here in Washington. So you got out of here at a good time. Um, but I don't think anyone wants to hear us talk about the weather forever. So we've got we've got a lot on the slate today. We had terrible timing on our last power hour because we talked about SBF, FTX, the whole situation, and then during the power hour, he was arrested and we didn't see it. So we didn't get to talk about that. We'll talk about that here in a second. We'll talk about why. That's one of my topics, but got to talk about our sponsor first.
that's right. Seven Investing. We're about to hit the end of the year. I think this is our second to last, or maybe last. I think it's our last one um, before New Year's. I think our next one for the New Year's comes out on January 1st. So, Seven Investing, use promo code money. You get two things off right now if you use promo code money through the end of 2022. And that is a 7-day free trial and then $100 off your annual subscription if you decide to stay with Seven Investing. And right now is the absolute perfect time to do a 7-day free trial at Seven Investing because they just did a comprehensive year in review for all the active picks, research stocks, and everything that they really cover within the Seven Investing universe. And I think that is just it's just a perfect time. So even if you don't end up trying sticking around, definitely go try it out. And if you do, make sure to tell them we sent you. Ryan, anything else? I know we're going to hit them in the middle of the show as well.
No, I don't think so. I mean, it is like if you've ever wondered like what's in their service, you can literally log in, use that code money. It's free for the week, and you can see all of everything that's ever been recommended in their service and what they think about it today in one article. So it's like really easy to just kind of like it's never been easier to I guess check out what they provide. But that is code money as a reminder. Do we want to talk about SBF?
That's right. Let's tease what we're going to be talking about. I know you just mentioned SBF, but what else are we going to be talking about today for the listeners?
Uh, Bob Iger's ego, um, and sort of the issues or the executive strife over at Disney. There was a sort of a Wall Street Journal expose, which I think will be worth talking about. There's some really interesting quotes in there. And then you've got what Sunday Ticket?
NFL Sunday Ticket moving to YouTube, and then I found a lot of smaller things that I think will be interesting. We're also going to talk. I made sure to include it. The collapse of Tesla's stock price this week. I think it'd be fun to discuss. Although I don't know whether, little spoiler, I don't know whether we're going to have any takes other than people wanted to sell shares.
Yeah, and probably Musk himself.
That is correct. Although he just said in a Twitter space that he is done selling through 2025. What would you put the odds on that? If you had to be a betting man, what would you give? Minus 1,000 or no, plus 1,000 that he won't do that? Would you take that? 10 to 1 odds? You get 10x your money if he doesn't do it by 2025.
Yeah, I would probably take that. I mean,
I think the
he
percentage is
said it
pretty
twice
low.
this year. He said twice this year he's done selling.
And that he
For
did it
what? The
again.
next week?
Yeah, and then he
Yeah.
did it 2 months later. All right, let me tweet out the link and then you can get going. Go ahead.
All right. Yeah, let's kick things off here. So, Sam Bankman-Fried, the CEO and founder of FTX, was arrested last week. I'm not sure on all the details, but I believe he was arrested by. Um, uh, he's in the Bahamas, right?
He was, yes.
Yeah, so he was arrested by the police in the Bahamas, and then I think he was extradited to the U.S. I believe I was reading something that like the prisons in the Bahamas are not. I mean, I'm sure no prison is great, but they are particularly rough in the Bahamas, and I people were speculating that he would probably want to be extradited. Anyway, he was brought to the U.S. I believe, and he just got bail posted. Like literally as we were speaking. That's not the point. That's not what we're talking about. Apparently, Caroline Ellison and Gary Wang ratted on him. So they were two of the other. They were two of the other people running FTX. Caroline Ellison was technically one of the co-CEOs of Alameda, which was the hedge fund associated with FTX. And basically, they both came to the SEC and gave an insider's account of everything that happened. And this is all public now, so you can go and you can read the insider's account. It's 38 pages. I think it's well worth it. I forget what I googled to. Yeah, I couldn't find an easy link, but maybe we'll. Is
Contact
there a way
contact
we post it
Ryan.
somewhere? Yeah, if you really want, just look up insider's account or look up SEC versus Caroline Ellison insider's account, and I'm sure there's a PDF of it somewhere. Anyway, this basically was this exposed everything that kind of happened for the most part. Not specifics on where the money was spent, but generally they know where the money was spent. So as it turns out, Gary Wang, SBF had him write the code that would allow Alameda to divert FTX customer funds directly to themselves. So he was asked by SBF to do it, and then Ellison was in charge of basically using those misappropriated funds for Alameda's trading activity. However, trading activity is kind of a loose term here because apparently a lot of those customer funds, so the software is written for those customer funds to just be redirected straight to Alameda's account. I believe they were literally depositing. The FTX accounts were basically direct deposits to Alameda's bank account.
Wow. When did that start? This year?
No. This was
Earlier.
apparently the quote is brazen multi-year scheme.
Wow.
This was started earlier. It kind of hit its peak this year because of borrowers or lenders asking for money back. But the basically there was a whole lot of stuff they were doing with it. So SBF apparently used it to make undisclosed venture investments. He used that money to buy lavish real estate and make large political donations. And then Ellison said that SBF directly told her to take customer funds in exchange for the FTT token and purchase more of it. So purchase more of FTT on other exchanges. So the price of FTT would rise. And that would artificially raise their collateral that they could quote to lenders. And so they were able to borrow even more money. And so on top of this, they were also borrowing money from external lenders, even though technically they were borrowing, you could call it borrowing, stealing money from customers. They were also using the customer funds to show that they had that money, which wasn't theirs, to raise money from lenders. But then there's kind of this good quote here, which says, when prices of crypto assets plummeted in May 2022, Alameda's lenders demanded repayment on billions of dollars of loans. Despite the fact that Alameda had, by this point, already taken billions of dollars of FTX customer assets, it was unable to satisfy its loan obligations. SBF, with defendants' knowledge, defendants in this case is Ellison and Wang, knowledge, directed FTX to divert more in customer assets, billions more in customer assets to Alameda to ensure that Alameda maintained its lending relationships and that money could continue to flow in from lenders and other investors. Ellison then used FTX's customer assets to pay Alameda's debts. So that is, I mean,
not all of them apparently, but
well, I mean, if you think about the customers as lenders, which they aren't, they were, I mean, basically just, they were never able to pay them back, which this is, and we're going to get to this, but this is why it really irks me now that SBF went on this whole press rampage where he's like, I just want to make customers whole. Like, he took it. He personally took it, and he's making it sound like there's just like an unfortunate circumstance. Like he was doing this very intentionally. So
yeah.
that's the part that really kind of pisses me off. It says the height of illegal activity peaked in 2022. However, it started way earlier. This, I believe, started essentially in 2019. And then the other part was there was this whole idea that like SBF wasn't involved with Alameda, that was Caroline Ellison and Sam Trabucco were the co-CEOs that SBF named, but SBF had 90% ownership of it, and he apparently was the ultimate decision maker on everything.
Well, he 100% did that to make it seem right. He definitely did that to make it seem like he wasn't doing the scheme, and he was probably trying to frame it on them. And it turns out they were the rats.
Yeah. I don't know. It just, that was sort of when it kind of started, and then obviously most people kind of know what happened when Binance sold their FTT tokens. It kind of imploded prices, and then there's sort of a run on the exchange, or run on the bank in this case, if you want to call it a bank. And they were unable, all those redemptions they weren't able to pay for because the cash literally didn't exist anymore. So I don't know. The bummer here for me is that this is kind of minus the buying extra FTT tokens with customer assets to drive up the price of FTT. The rest of it is exactly what I thought when I heard that this was collapsing. This is kind of exactly what I thought was happening. Like, it's basically what everyone was speculating. My question is,
or go ahead.
I guess my big question is, how many other exchanges or token issuers are doing this exact same thing? Those, I guarantee most of the tokens that are issued, that they are not backing those assets 1-to-1.
I would not be surprised if you are correct there. Guarantee might be a strong word, but
okay, yeah.
But highly, it seems likely, it seems plausible, it seems like they should be investigated if possible, especially if they are, which all of them are, offshore. You have to ask why they're offshore for a reason. I wonder if SBF, because he seems to be intent on not going to prison, and I'm stealing this idea from some journalist, someone else out there in the world. What if he flips on the bigger whales, Binance and Tether, who have even more, they're a bigger part of the crypto industry. Now, that would be interesting, because if Tether and Binance are doing the exact same thing as FTX, which not guaranteed they are, but there's suspicions that they are, I just wonder what the fallout of that would be. It'd be a nice end to the. We're gonna have to make this into not. It's not gonna. This is gonna be way too long to be a movie now.
Well, here's the thing.
To make this into. It's gonna have to be a trilogy of whenever they make this movie. Michael Lewis's book is gonna be 800 pages.
The thing that's, I guess, kind of frustrating is that he was building these play tokens so that he could get cash and do things in the real world with real cash, make political donations, invest in younger stage companies or venture investments, buy lavish real estate. Like, he was just coming up with these bullshit tokens, and it gives, maybe it's like a sense of confirmation for me, but it gives no validity to the industry. Like, it just shows that they, like, on the other side of these shit coins are exactly who are people who you think they are. Like, they are doing something with the real money. This isn't the new economy.
Yeah, sorry. I keep trying to interrupt you for some reason, but they are who we thought they were. If you, and look, we're just in our 20s, so we're not seasoned at all. But if you're someone who is extremely confident that like crypto is the future, you're betting on Coinbase. We covered Coinbase on one of our not so deep dives before, and I think that was probably right around a year ago. And that was because there was a hedge fund that wrote a really long research report on them. You see it constantly, people saying, well, this stuff is a fraud, but crypto is underlying is the future, and blah 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 blah. And I think, look, there are some things that both of us in the investing world really truly believe in, and it would be hard for us to give up those beliefs. Say Buffett style, that's kind of our camp. Value investing stuff. I think if that's, if you're that, if that's your true belief, you really have to ask yourself in this moment, am I wrong? Is it the thing? And this again comes back to the quote from the Big Short movie, which I always get wrong. And the first 3 times I watched that movie, I didn't understand what the quote meant. which the one at the opening scene
It's the
where
Mark
it's,
Twain
yeah, the Mark
Mark Twain
Twain
quote.
one. It's not what you know. It's not what you don't know. It's what you know for certain. That just ain't so, which means it's what you know for certain or what you believe is certain that's actually wrong. And I
Yeah.
think there could be some of that here. And
Well,
yeah,
yeah.
it's just there's just no evidence that points to the contrary because it seems like anyone here in the industry, and I wouldn't look, I'm not, this is not an allegation against Coinbase or one of the quote unquote reputable crypto places like Robinhood that are audited, I guess. I wouldn't be surprised if they're doing stuff nefarious as well. We saw a tweet this week that was shocking from someone that works on Coinbase's legal team that said, what's basically, they said, what's nice about crypto is that you make up the law as you go along. And I read that and said, if you have money in Coinbase, I would be a little bit concerned, just slightly, as they seem to think that the law does not apply to them and that they're just making it up. And I want to be certain that the government, you know, for better or worse, is the ones that are applying the laws here.
At least with Coinbase, they it is public and it is audited. So it's like, I mean, that gives me a better sense of they still might be screwed, but at least they're honestly screwed, not like lying and screwed. Um, I don't know. I mean, I read those financials and I still kind of laugh, but
That's right. They might still be totally screwed, especially they're doing their own stable coin, which there are big questions about. There's some investigative reporting out there on it. Not going to pretend like I know it for sure. But yeah. All right, let's move
there's a
on to the next
question.
topic. Yeah, ask the question in the chat, and then we can move on to the next topic.
Yeah, Mark says, "Happy holidays, chaps. What's your favorite portfolio tracking tools using Yahoo Finance as a beginner, but now looking for something more flexible?"
Well, that leads into our who's going to be our next sponsor in early 2023, right?
Yeah, I guess Stratosphere is one. It's kind of new, um, actually pretty new, and it's stratosphere.io. There's a lot of cool tools in there. Basically, you can track a whole bunch of different elements of the business, so the financials as well as other reporting metrics. So things like, um, you know, I guess company specific stuff. So like Costco's warehouses or um, Spotify subscribers, Netflix subscribers, stuff like that.
Yeah, you can build a nice watch list. It's very fundamentals based. If you're a fundamental style investor, this is not going to have any technicals. If you're technicals, if that's your cup of tea, which I don't think our audience is, I would definitely try Koifin as well. But Stratosphere, if you're fundamentals oriented, I mean, it's been perfect. And that's, you can track your portfolio fairly easily in that regard. And Yahoo Finance is not, I don't think it's been updated in 15 years and it's fine for the basics, but Stratosphere, they have a free tier. And again, we don't need to start doing an advertisement for them. We're going to be talking about them for the next few months at least. They have some great stuff if you
I
are
would try to, yeah, I would try to
especially
get
if you're a beginner. Yeah.
All right, yeah, let's talk about the next item. So Disney's former CEO and now current CEO, Bob Iger. Well, he was a former CEO. He recently, I swear, he
Yeah.
basically like announced himself as CEO again.
Well, he was
Convinced the board.
he graduated himself up to executive chairman right before, or actually right before the COVID crash and the world shut down. So yeah, he's a nice guy. He doesn't think about it. Sorry, I'm spoiling your topic. You go ahead.
Yeah, yeah. I mean, that was part of it. But basically, he passed the torch on to Bob Chapek, and there was always kind of this concern that Chapek maybe didn't have the true. He didn't really run the company like ever, like even though his title said he should have. And then this week, the Wall Street Journal, I think it was last week actually. So we've been we did our last Power Hour like a week and a half ago, but last week Wall Street Journal had an expose essentially saying that Bob Iger never really gave up like management his responsibilities. So there's a couple of quotes I want to share. There's one that says that Mr. Iger was unhappy with Mr. Chapek was well established. Less well known is the depth of his antipathy and the lengths he went to deflate Mr. Chapek behind the scenes. It says, as executive chairman, Iger wouldn't move out of the office that he had at Disney's headquarters, which I think that's maybe one sign that if you're no longer the CEO and
Think
maybe
if you're
you
a
pass
VP,
on the CEO's office.
think if yes, exactly. Think if you're a VP, and I'm sure Disney has approximately 100,000 vice presidents. Think if you are in like a VP role of whatever, and you're like, you see that, how confused would you be?
Yeah, the other thing is like, let's say you're sort of, you're in the same office. And I know it's weird that this is like a part of the bureaucracy within companies or like the unnecessary steps, but if you're in the office and then you're promoted to let's say you're in like a bland office, just like every other VP, and then you're promoted to CEO and you stay in that same office, and because the other guy wouldn't relinquish it, that guy's obviously still in control, especially if he's coming in every day and running the company.
Or he wants the illusion of control, or he wants not the illusion. He wants everyone to see that he has the aura of, oh, I'm the executive chairman, but I'm still really the visionary here.
Yeah, it also goes on to say he called strategy meetings with Mr. Chapek's underlings without inviting the new CEO. I mean, this
is an episode of Succession right here.
This is self-explanatory. Yeah, and then it says Mr. Chapek told friends that Mr. Iger's attitude seemed to be, they work for me, not for you. So here's what I don't understand. Why was Iger, so he voluntarily stepped down, right?
In February,
he was looking for a successor.
In February 2020, yeah.
If you're going to voluntarily step down, why are you so reluctant to relinquish control? So you can come back and feel like a hero?
I think my conspiracy theory is he knew that COVID was going to screw them. Right? Yeah.
Plus, he did that double, like, I'm retiring right as COVID hit. And then he's like, well, I can't. All right, I'll come back.
I have to
be like, actually, I'm out.
Yeah, no. And then he came back as the executive chairman. And then he's like, oh, no, I can officially leave now. And the business, you get anyone into that business in 2020, it's going to be awful. You have cruises, you got theme parks, you got giant China exposure, you got movies in theaters. They're the biggest movie theater business, or movies that go into theaters in the world. Who's going to succeed in that? And they're in a giant transitional period that's really, they were too late to. It's, yeah. Maybe he just wanted to this is almost like resetting stock options, where he had such a great reputation because the launch of Disney Plus was so successful in that first year. They executed pretty strongly, right? And then things were looking great for the company. Then COVID happens right before that he leaves. And he's like, oh yeah, COVID happened. And then all the problems they have right now with unprofitability, complaints at the theme parks, workers and stuff, China, movie theaters aren't back. And he's like, all right, now I come in, the expectations are extremely low. And I can fix, quote unquote, fix this company again, even though we do know that the majority of the blame should be faced on him.
Yeah, I don't know if I'd call Disney Plus an incredible success.
The first year was pretty strong. Right?
In terms of sheer numbers, yes.
Oh, but I forgot about the pricing.
But he launched they launched at what was it, like $5 a month or $7?
And they kept giving it away for free. Yeah.
So I felt like he was doing anything just to bump the user numbers up. And then the hard part is having to raise prices, which he waited for Chapek.
Yeah, he's like, I launched at $5. Our unit economics are not going to work unless we go to 10. You're gonna have to do that, and then see what churn happens with people with uneconomical streaming services like Amazon and Apple TV, and the continued rise of YouTube. You're gonna have to compete with that as well. And yeah, good luck with that.
It's just I thought I liked Iger 3 years ago. I've done a complete 180 here. I'm not fond of him at all.
I got
And
to sniff.
he's the king of managing his reputation. Like that to me seems like his primary goal above all else.
It worked for us back when we were less skeptical, I think, or maybe we didn't know about him as much. Yeah, I think I've said this before on the show. I'm mad I said it the 2 or 3 times ago. I don't know if Disney is GE, but I would not be surprised if we look at him like we look at Jack Welch now, where really built up the business to success, but it made it a bit fragile. That the consequences came home to roost, and I doubt Disney is going to be like GE because it's been a dominant business for so long. But I would not be surprised if 20 years from now we look at Iger in a similar light, because that's what it seems like the stories are extremely. There's a lot of correlation to what he did, what Welch did.
Yeah, I
But
can
not
see that.
it's not
I agree.
it's not exactly the same. I
Well,
know.
they had what Welch had a pretty long tenure there, and then you start to revere him and think, oh wow, he's done so much, so well, and especially if the stock does well during that time, you start to like the stock price makes you believe that he's the perfect CEO, perfect manager, but you don't see a perfect manager has a great successor, and they're able to
Yeah.
pass the business is able to do really well beyond them. So I would say that he doesn't pass the test in that regard. In the other part,
Not yet, not yet. The story's not done, but so
maybe
far, maybe the next one is successful, and we're
and
totally wrong 10 years from now.
I'd say Schultz is probably the same way.
Yeah. Well, Schultz, what has he done? He's done what Iger's done twice, right? Where he's come back, I think twice.
I don't know if he's come back. I know he came back after Gary Johnson. Did he come back another
I think
time?
yeah, before that, I think he had already, yeah.
I think they just probably love the feeling of like, don't worry, I'll rescue the company. And then it's like, we're going to start by cutting the dividend. Or it's like, we're
Yeah.
going to start without, what did he do? We're going to stop share repurchases and we're going to focus on employees. And then like a year later, they restart the repurchase program.
Yeah. And there's a giant labor strike or brewing labor strikes at the company. So you're not, I think, and I was listening to someone that said this, almost all, I think, CEOs are bad or not up to par. Or sorry, no, not bad. Almost all there's very, very few great executives that are worth what they're getting paid. Might just be Buffett, really. Might be the only one.
No, Mark Leonard.
Fair, yes, yes. Good
There's
point.
other ones. I mean,
There's
there's
others.
others.
That's a joke, but
Bezos. I guess not anymore, but
yeah,
he did a good job. And I would say, I mean, even though retail suffered, I would say Jassy has still generally done pretty well in terms of improving the business.
yeah. The narrative on that company is a lot different than what the financials actually look like, and people are just worried about the underlying earnings right now. Yeah, what's interesting about Bezos and Amazon is that compared to all the other big tech companies, and I think you can probably exclude Apple because they're older, but some of the newer big tech companies, their original business model was so hard. They went after an extremely hard game that had an extremely low likelihood of success, and they pulled it off. And it's kind of the opposite where Google,
Don't you think that
the
makes it a bigger moat?
now, yes, the likelihood of success, like if you looked at say Google in 2002 when they're doing less than $1 billion in revenue, way less than $1 billion in revenue, and you're like, wow, they came up with this crazy business model. The likelihood of success seems higher. Maybe they wouldn't. You could not predict the 90% dominance in search, but they had created such a good business model with so easy unit economics that the founders and the co-CEOs or whatever they were, Page and Brin, didn't even care about advertising, and they and the business model was so good that they actually neglected it. And I'll come back to that when we talk about YouTube TV. But then Amazon's the opposite. So it was such a hard game where like Google at one point. I don't think it was a ham sandwich because they had to make some really strong acquisitions, but Amazon was 100% not a ham sandwich and definitely still isn't. And
They had to plow every dollar, and then some back into the
and,
business.
and come up with an extremely innovative subscription model that has, I mean, one of the best just right business ideas of the last few decades is Amazon Prime.
Yeah,
Just
probably.
just the conception of that saved their unit economics.
Yeah, I do think having a harder path to being a tech giant has given them a much deeper moat.
Yeah, what's interesting though is I was listening to the Founders podcast and they went over Jeff Bezos's old letters, or the person, it's just one person. And one of the things they talked about at Amazon was that they were, and this is one of the early ones, and they said, our culture is frugality. And I was thinking, maybe they forgot about that one.
Well, hold on. It was never we're not going to spend. It was we're not going to spend on stupid shit. It was stupid stuff.
But I think they may have forgotten that. So we have some evidence from
You think so?
Yeah.
I mean,
Well, they're not afraid to spend on stupid business ventures if it turns out to be stupid. But I think they, and I guess we are not inside there. They're definitely less, $200 lunches per employee like a San Francisco company. But I think maybe some of that seeped in the last decade.
maybe I'd say relatively speaking, like
Relatively, yes.
when
Yeah.
you compare it against the people they have to compete with for talent, they spend less on stupid stuff.
Less on lavish stuff, less luxuries. I mean, they'll waste $10 billion a year on Alexa, but that's, I guess, different. Yeah.
Yeah. All right. I don't know. That's pretty much it for my two topics. What do you have?
Before we do that, let's talk about 7 investing again. The 7 investing article of the week. Did you bring that one up? Remember, use code MONEY, get $100 off your annual subscription, and check out that 7-day free trial using code MONEY. Get that year in review. Perfect time to do it. Simon wrote, who is the founder of 7 Investing and the CEO, what the true meaning of investing is. And he kind of goes through how there's a lot of people that try to make just calls on financial media, which is basically just, I'm calling it long or short here, or on Twitter to, boost their ego, talk about their performance and talk about, calling a stock at a certain moment or bragging about something, which we do that to some regard, and he's right. It's not the actual reason to invest. And he says, and he thinks the better approach to investing, and this isn't going to be a novel idea by any means, but he says, quote, investing is meant to be a long-term journey that you personally embark on to improve your financial future. It isn't a one-size-fits-all approach where we all blindly follow those who bark the loudest. I thought it was pretty smart, or pretty eloquent there, and I agree. Any thoughts on that as we head into the new year? I think this is his.
Sorry, could you say it one more time? I was pulling it up right now.
Investing is meant to be a long-term journey that you personally embark on to improve your financial future. It isn't a one-size-fits-all approach where we all blindly follow those who bark the loudest. I really like the bark the loudest part because you're going to hear the loudest people, and you have to know that those are probably the people that have done the reason they're loudest is probably because they've had the most success over the last, say, time period, couple years, year, something like that. And in reality, you should probably be not listening to them because they're going to be overconfident just because the price is driving their own narrative.
Yeah, I do. I'm reading that quote now. I do like that. And I think I used to be in the camp that was like, it is one size fits all. The only thing that matters is total return. But like, I think since at least over the last couple of years, and probably because the bear market, I've grown to kind of accept or be more in the camp that you have to find a strategy that you can weather. It might not be like optimal in terms of total returns, but it will generate enough returns for you and allow you to do it for a long time. That that is so much like it's so much easier in practice or saying it in theory than in practice to have sort of the optimal total return portfolio. It just never plays out that way. So I don't know. Yeah, I do like kind of that there is no one size fits all.
Yep, agreed. And 7 investing isn't definitely not a service for everyone, but if it's your type, innovation type stuff, growthy, early stage, then
They got their value picks.
as well. But they definitely lean that. And they said, and Simon wrote in this article that there's plenty of innovation on the horizon in 2023, and he can't wait to research it. If that's your sort of investing, I know there's tons of people out there that love that. Definitely try out the service, try out that free trial using code money. But I totally agree. The longer, if you can go 50 years and you generate, well, I guess it depends how much your nest egg is at the start. But if your returns are greater than 5% a year in real terms for 50 years, you're going to be fine. No one's going to complain. It's really about staying in the game for that long. And yeah, you'll be a lot happier, I think, with your freedom if you go above 10% a year. But in the long run, it's really about the most important thing is not zeroing your account, because if you do 10% a year or 5%, and then the 10% a year person zeros by making a stupid bet on a company that's going to go bankrupt and putting 30% of their portfolio in that, well, yeah.
We do have a timely comment in the chat, and maybe this can help play into your second topic, which we could probably just talk about right now. He says, Matthias says, I shouldn't sell my house to buy more Tesla. I believe that's sarcastic.
There is yes. Well, we don't.
I don't know Matthias, so I'm hoping that's sarcastic. But no, you shouldn't sell your house to buy anything.
That's right. There's yeah. I mean, he's
regardless of our opinions on Tesla.
Yeah, and you can own it. It's not, a lot of people are have made money in Tesla, and we've been skeptical the whole time. And this is referring to a popular Twitter account that's talking about doing that, and it's just kind of sad to see, because I don't want to say what the Twitter account is, but it's just not. People are going to get hurt, and it's just not nice to see.
It is,
but yeah,
it's kind of an interesting example of. I know the account we're talking about. The difficulty in being too vocal about stocks you own.
Yes.
Because I remember when this account talked about how much he made.
No, we had narrowed it down.
How much they made on Tesla. And everyone kind of championed him for it. And he gained sort of this massive following and probably made a whole lot of friends online by building this persona around one individual company, which when things collapse, like you feel like your reputation's at risk, and then you feel like you have to do things that are probably not in your best interest. So
yeah, it's kind of interesting because we're,
be a generalist.
Yeah, we're trying to build a business around sort of this new age financial media stuff. And there are some cheat codes out there. We could become those type of people that basically, and I don't want to speak for these people, but I think underlying some of their not ambition, it's craziness, or maybe what people would call absurd. It's for a reason, because those are going to get lots of views and they're hopefully going to build up an audience. But if you lose your savings in that regard, and then you just go, well, I got 500,000 followers on Twitter or a big YouTube audience, well, what was it worth? Where there's a form that you could go through. But let's talk Tesla, actually, because the stock is down, like 30% this week. There seems to be some margin calls on it. Elon was selling as well. And I think it's down like 70% this year now, something like that, maybe 60. I don't know. Any thoughts on that? Because I know we're really anti the camp of determining why a stock dropped. But do you think this is a sign? Because this is what I think, that this is the beginning of the end of the bear market. Not the end, but the beginning of the end.
Yeah, I can see that. Actually, no, I'd probably say we got a long way to go. But hey,
the average bear market lasts 1.4 years.
Yeah, but I'm just not. I just don't see how it doesn't go on for a little bit.
But not all bear markets started with the biggest bubble of the last 100 years
Yeah.
since
mean,
since 1929.
there's still excess in places, and I think it's starting to get to the point where it's going to hurt. Like we're probably still going to see spending come down a little bit,
Yeah.
which
Also,
makes me think it's going to trickle through all the companies' financials.
oh, it will. Yeah. Just pray.
Maybe you know what? I hate speculating on that stuff.
That's
So maybe
so
it's
well.
the end of the year.
There's a lot of variables for sure, but I think we're definitely seeing this week is capitulation for the first time.
Yeah, and what the other part that I find kind of fun to watch is watching people trying to find reasons that the price is dropping
Yeah.
and coming up with whatever excuse they can. Which, you know what, Elon might be right in why the stock is dropping. It's probably a combination of things, but when he's like the discount rate's higher.
Yeah, that's I think that's hogwash because if the discount rate mattered, why
It would have happened a while ago.
rate
Yeah.
long-term rates are down since Tesla started collapsing.
Yeah, it might have just had a delayed effect for a lot of
Is
their
that and
sellers.
that's the only stock it happened to?
I'm saying maybe that's the last stock that a lot of the people that have sold lately were holding on to.
I think yes, that could be correct. They were, they're hoping that could be the one their salvage asset for the people that focus on quarterly stuff or annual stuff, and they're really trying to hit their marks. Yeah, I could see that.
But you know what? There's probably something to the validity of him going kind of like ultra conservative and kind of tarnishing his brand as well as Tesla's.
Yeah, and here's what I think: their backlog has collapsed from all the third-party estimates. I think people are looking at the fundamental story and saying, "Oh, growth might be because
It
against
might
all."
not grow. It might literally not. It might decline.
Exactly. I saw someone discussing how a year ago people looked at Nvidia, what, $600 billion market cap, growing 40% a year. You could see just compounding, trading at 40 times earnings. They're like, oh, 40 times earnings is not that bad. It's growing 40% a year. And then it turns flat, and then it turns negative. And you don't, and
it's
then
so
the
hard to
earnings
imagine it. I've done that. I'm sure we've all done it, but it's so hard to imagine something going from. It's a lot easier to say like, all right, it's growing 30% right now. Well, you know, if it has a down year, maybe it'll only grow by 10% next year. But especially in these cyclical businesses, like it could not grow. It could decline.
And if it's trading at 40 times earnings, the margins are going to go down and the multiple is going to go down. So that's just a recipe for,
Yeah.
oof. I mean, our biggest losers the last 2 years have been the ones where, well, they started out basically at break even, but there's been a little bit of either margin deterioration or not really. It was kind of the reverse, no margin expansion, which I think a lot of investors were expecting, and the growth decel, where that's what really hurt. The two things.
All right.
And I think Tesla investors and the Nvidia investors could really learn from that. We're trying to, at least.
You know what else I think has caused probably a lot of the selling? The selling.
Well, yes.
You're seeing people sell because
well, the incremental buy,
I'm seeing a lot of people go, what's happening? Why is it happening? I keep seeing the price go down. They're trying to rationalize why it's happening. Well, Elon keeps tweeting and it's ruining the brand, and people are scared that people aren't going to buy Teslas anymore. But it's the price actually declining that's scaring people the most because they don't know what's happening. They don't know when it'll stop.
Well, yeah.
Which if you buy something that repurchases a huge amount of their stock, then you don't have to worry about it.
Yeah. Well, they do not have the capacity to do that versus the size of their market cap. But at the end of the day, for every stock, the reason a stock is trading at the price it's at is because the last buyer bought it there and the last seller sold it there. So, yeah, that's it. All right. Next topic. This is a I think one that'll spur some fun discussion, and then we have some other ones. I know you got some extras as well in case we have more time. NFL officially, or excuse me, NFL Sunday Ticket is officially moving to YouTube. This is a pretty simple story, pretty simple deal. So YouTube has signed a deal with NFL Sunday Ticket, and that is the National Football League's premium pass that gets you access to all game streams for an annual fee. I think maybe all game streams except for your in-market one. Costs around $300 per season, and it is, yeah, it's just one. I think there's a few million subscribers a year. It's just kind of for the ultra fan that wants to watch all the games. Now, it's been at DirecTV for a long time. It's kind of held up DirecTV for their subscribers, but the distribution is going to be interesting. So, it's $300 a year, right? You'll be able to upgrade it through YouTube TV. And also you'll be able to upgrading it using, if you don't have YouTube TV, through YouTube's primetime channels, which is the new place on the YouTube app where you can subscribe to streaming services and watch them through the YouTube app, which I think is a pretty smart move. The deal numbers are a 7-year deal. So I think, what is that, through the end of this decade at $2 billion per season. First thoughts, and then maybe I'll come back to my thoughts.
I like the YouTube TV distribution channel. I don't know how successful the primetime channels would be, but at least there's no reason for them not to add it there. If they're already buying the rights, they put it in as many channels as they possibly can that they own. So it makes sense. But I feel like a lot more people would pay up for a little higher priced YouTube TV subscription with it included than people paying directly for it through YouTube.
Yeah, maybe they will bundle it somehow. What's interesting, I think, as well, is that the complaints about buying Sunday Ticket, canceling Sunday Ticket, it's sort of like one of those newspaper subscriptions where people have to call up DirecTV, and they just had a terrible customer experience. I wonder if YouTube, and this is, I think, why the NFL said they want to go with a streaming partner now, because the other competitor was Apple, who I think bowed out for various reasons. They want it to be super easy for people to sign up, and I think, well, if anything, YouTube is the best at making things extremely easy and customer centric, where no one's complaining about UI, whatever, customer experience.
I honestly think I think maybe I've underestimated YouTube's ambitions.
Their CTV ambitions are large. Here's what I think could seal the deal as just a dominance in the United States and maybe internationally, because there's local sports rights. And I think it is, and again, these deals come up every, I don't know, 7-10 years. So it's not going to be overnight. You can't just steal the rights. But a lot of the local sports rights are through these janky, old school channels that are really hard to get. And I think they could, for not that much money relative to the size of Alphabet, get these deals, and you can make it even better bundle with YouTube TV, or make it free on YouTube, where the advertising, just the eyeballs, the number of hours watched. I mean, you could get their CTV listening or viewing hours. I mean, they're already gaining market share of CTV viewing hours. I think it'd just be extremely smart to try to be one of the places to watch sports, because that's the last, you could really kill traditional cable at a faster rate. And the faster cable dies, the faster more people are going to be watching YouTube on their TVs. I think that's going to benefit them in the long run, even if the economics are break even, like a lot of sports deals are.
I think you're right, but I also think you're partly just saying this because you're frustrated that you don't get the Mariners games on your streaming
of course.
solution.
I think, yeah,
but I think you go back to this all the time. You're like, why don't they do this?
Yeah, well, I think, and not everyone's.
It's a fair. I mean, I think
tens of millions of people across the United States would be happy about this.
I think a lot of
that
people,
was go ahead.
Yeah, I think a lot of people would be happy. I think a lot of people are probably looking and saying local sports viewership hasn't grown that much. But I think a large part of that is because it's not as accessible.
Yeah, you're not going to pay $90 just to watch that. If you're
People talk about how, well, it's kind of a declining market, like the local sports viewership among younger demographics.
Oh, it would soar if it got on YouTube. It would soar. What's the
Yeah,
numbers of young people on YouTube? Isn't it 95% use it every day? 95%. I'll say that again. 95% use YouTube every day. I don't know, not know why the owners of, and we're not talking NFL or because NFL is kind of larger than all the other sports leagues. If you're an NBA owner, if you're a hockey owner, um, if you're a soccer owner, even or you're a baseball owner in the United States, I think abroad, probably soccer for the local sports rights. Why are you not clamoring to get on with one of these streamers, especially YouTube, where there's everyone knows how to use it. The streaming quality is fantastic, and again, 95% of people, young people who you're trying to not lose, use it every single day of their lives, probably for an hour a day.
yeah, I would think that that would be one of the premier destinations. The other thing is they probably have a lot of bargaining power. YouTube
YouTube,
does
yes.
because of their viewership already. If you're the NFL and you're thinking about what streaming solutions you want to give your rights to, they've taken a risk with Amazon Prime. And from the stats I've seen, the Prime viewership of Thursday Night Football was, at least in the first year, was significantly worse than when it was on linear. Maybe that's
I think
changed a little
that's,
bit,
yeah, that's, I think
but it's
it's,
also it's a smaller pool.
it is a smaller pool. And I think what's tough though is I think we're going to have to wait for maybe 5 years to see if it was a failure because there's a lot of people, the older audience that aren't going to be able to watch it. So I think we'll have to wait and see. But yeah, that is a bit of a concern. YouTube would be a lot easier for people to fire it up. But
If you give
what's
it to someone who you know already has the scale and already has the eyeballs, I mean, Apple TV is kind of fighting an uphill battle with this. So is the Amazon Prime Video. Um, if you give it to like YouTube, who already has the scale, you have less of a risk of losing some fans.
Yeah, yeah, I think so. Also, what I think needs to be compared though for the numbers is that there are still a good chunk of households that do not have internet connected TVs, and they're just going to struggle to watch Thursday Night Football um, on Amazon Prime, and that'll slowly fix itself over, say, the next 5 years. It'll kind of become a negligible number, but what you know, how's that going to
This is
affect it?
this is kind of that awkward period in like connected
Yeah,
TV streaming where it's like,
at least for sports. For sports,
yeah, well, a lot of the like property right owners, so whether it's like sports leagues or like content owners, they have to take, if they want to do an exclusive deal, they have to take a risk, especially since it's basically like 50-50 CTV versus linear viewing right now in the US. They kind of have to take the risk to go towards connected TV, knowing that half their audience isn't going to be able to watch it.
yeah.
Over
Here's
time, that's fine, but they have to take the risk now.
Yeah, I think why not take the leap?
Because
Think
it's a
short.
cash cow. The
Yeah,
linear streaming's a cash cow.
yeah. The advertising. Have you seen like you've watched local sports at some point? The advertising technology they got running on these local sports channels is, I mean, what do they got? They got a hamster back there. I see the same ads, same 5 ads the entire season.
Streaming's bad too.
Sometimes, but
They just
YouTube,
don't even have ads.
yeah, but think about how beautiful it would be from an advertiser's perspective, or even just an ad inventory if YouTube offered local sports and they had those streaming ad insertions. I mean
Yeah, that
that's
would be great. The other, and this reminds me,
so much inventory.
this conversation reminds me of I had to rent a car in on my trip last week, and for some reason this car didn't have an aux cord, and so or any sort of an input, and so I had to listen to radio. That is a market that not not should be, must be disrupted.
The
They are
experience,
the most janky, like
yeah,
scammy ads I've ever, like just the worst ads.
and the quality's awful. from a sound quality, and there's so many ads. The user experience
It's
is
like
just
all law firms.
it's horrendous. Yeah, it's horrendous. It's
Anyway,
horrendous.
you got one more thing here. We got a couple minutes, so we want to talk about that.
Yeah, I gotta click the tweet here. What was it? This is some DoorDash fraud. It's too long of a Twitter thread. Let's click the other one. Spoiler alert, DoorDash is a scummy company. Who knew? Okay, here's one that I think is interesting. And that is the personal savings rate in the United States during the pandemic for two reasons. One, the stimulus, and two, the fact that people weren't spending on going out to eat and travel. The savings rate shot up to 30%. And typically, and this is for individuals, typically the savings rate hovers between 5 and 10%. United States, we don't like to save money. Over the last year, or 2 years, actually, would it be 3 years now? Well, in between 2 and 3 years. After the savings rate shot up to 30%, it's slowly trickled down and it's actually gone way below 5%. We're at like 2% now. And I guess some of that makes sense because there's more, as they're saving more earlier, the balance sheet of individuals was higher. So they're going to be able to deplete it more with having the same, savings as they had pre-pandemic on their personal balance sheets. Here's the question I had, and guess didn't get much interaction, but I think it might. I wanted to ask this question to you. What stocks are potentially over earning due to this dynamic? And do you think maybe it's just a basket of consumer discretionary items?
My guess would be the consumer discretionary. But right now, I don't think they're over earning right now, because when you look at the grocery commentary or the commentary among like department stores, Target, the retailers, stuff like that, it's the consumer discretionary items that are now hurting. I think they were over earning.
Right. So I think forward, I want to know what forward earnings are, say, the next 12 months from now, this holiday season plus the next 3 months versus last holiday season and the 3 months preceding this. I want to know if those are going to be materially different. My thesis is, and this is not like a real thesis that I'm going to make any investment decision on, is that they will be a lot different.
It's interesting. China, I'm pretty sure, is like the inverse right now. Savings rates have kind of climbed up. Household bank savings. So
They generally save more. The country, for better or worse, has struggled to turn themselves into a consumer economy because people, and one of the factors is that people in general in China save more, which I think is probably smart.
yeah. What's this DoorDash thing you got?
Okay, so apparently there's a lot of fraud. Okay, so some guy ordered a burger on DoorDash, and there was basically the Dasher did a fraud where they did a proof of delivery, sent a photo of the house, which is just a screenshot of the house from Zillow, and got their payment. And then it was clearly fraud, but DoorDash won't refund them. So these Dashers are doing fraud on the by faking orders, right? Getting order volume, keeping everything. And yeah, it's not. It wasn't a good look for DoorDash because he went to his bank, he went to DoorDash, and DoorDash is like, no, yeah, it's all legit. But what was interesting is that the tweet got so popular that there was a developer or maybe product manager at DoorDash who said, hi, at this person, I work for DoorDash. I want you to know I flagged this internally and it's being reviewed, both this order in particular and the errors you highlighted more broadly. And it's quite interesting that when someone does a viral online post, it can actually have some effect in the real world. But again, I said this earlier, they are who we thought they were. DoorDash. They talk about supporting local businesses. They have all this narrative, and I really think it's propaganda. And all the evidence over the last 5 years is that they are an extremely selfish and extremely scummy company that I don't think anyone should be associated with. That's how they act. So
I'd say this is more on well, it's for starters, it's more on the Dasher, but their customer support here was a failure. So unsurprising. Initially when I was reading this, I thought it was worse. I thought it was like DoorDash was pretending to have Dashers, and then it would just screenshot their Zillow house, and just like,
That would be bad.
yeah, it'd be pretty crazy. All right.
I think it's
I
5,
think that's, yeah,
5 p.m.
it's been an
Pacific.
hour. You want
All
to sign
right.
off, or you want me to?
I'll sign off. Let's hit the disclosure. Remember, we are not financial advisors. Anything we say on the show is not formal advice or recommendation. We are general partners at Arch Capital, and clients may hold securities discussed in this podcast. If you'd want to watch these, we go live on YouTube every 4 p.m. Pacific time on Thursdays. That's 4 p.m. Pacific, 7 p.m. Eastern on Thursdays. You can also watch the replays on YouTube as well, although it's just 2 guys on a Zoom call. Give us a 5-star review on Spotify and Apple Podcasts, and subscribe to our free podcast newsletter that is in the show notes. Thank you all for tuning in and watching. We will see you next time.
And thanks to Matthias Houghton, or Houghton, for the questions in the chat. Who's keeping this conversation alive. So props to everyone for the chat.